Myths and truth about precious metals. Gold and silver have always been valuable. Should we consider them today as a means of saving and increasing money? Debunking popular myths. Myth. Investments in precious metals are the most reliable. Yes and no. Precious metals are always valuable, even in times of global economic crisis. But if we talk about short-term investments less than a year, then investments in precious metals may not bring income or even turn into losses. Unlike securities and even cash, which sometimes, as history shows, turned out to be unsecured pieces of paper, gold, silver, platinum, and palladium always have an independent value. In this sense, your investments are protected. The value of precious metals cannot become zero even during periods of economic turmoil. On the contrary, in unstable times, their prices rise along with demand. On the other hand, it is difficult even for analysts to predict the return on precious metals. Prices are affected by global demand conditions, and it is almost impossible to take into account all factors. The price of precious metals fluctuates a lot every day. There were even periods of several years when their average annual price steadily declined. For example, from 2, the price of silver fell by half and then began to rise again. But if you look at the long term, investments in precious metals are outpacing inflation, which means that your savings will really last. Conclusion: investing in precious metals will really help you keep savings, but only if it is an investment for a long time, at least years. In a short period of time, you have a chance not only not to increase, but even to lose part of your savings. Myth. When precious metals get cheaper, you have to buy them with all your money because then they will rise in price anyway. No. First, you should not invest more than of your investment portfolio in precious metals. Don't put all your eggs in one basket, even if they are golden or silver eggs. Secondly, you need to decide on the goal. Do you want to make quick money or save money? This depends on your investment strategy. If your goal is to get a quick return, follow the universal advice of financiers. Buy assets when prices are just starting to rise after a decline, and sell as soon as prices begin to decline. But in order to make money like that, you need to carefully monitor the market. But that's not all. You have to go against your psychology. After all, if after the purchase the price rises, instinctively there is a desire to fix this profit. For example, you bought a precious metal for rubles and sold during the growth for, and the price after that increased by another rubles. Or for example, after buying a bullion, the price went down and you are waiting for it to go up. Selling at a loss can be psychologically difficult. As a result, on such emotional fluctuations, you can lose more. At the same time, you should not buy and sell too often. After all, every time you pay a commission to the company through which you make transactions. It could take all the profits. Therefore, set clear boundaries for yourself, how much to wait to check the trend. If you have no experience in playing the market, it is better to invest for the long term. This way you will surely earn more. You can stick to a strategy where you regularly invest a small part of your free money in precious metals regardless of the price. For example, once every half a month. In a few years, this tactic should be justified. The growth in the cost of precious metals will outstrip the level of inflation. Myth. It is better to buy the most expensive metal. You can earn more on it. No, not always. It all depends on your financial plans, the economic situation, and the dynamics of the price of a particular metal. You can invest in any of the 4 precious metals: gold, silver, platinum, or palladium. The most popular is gold. It is stored in the reserves of central banks of all countries of the world. Historically, this has been the most common form of wealth accumulation. Silver is in second place. It is very affordable. Banks offer it in both bullion and coins. Like gold, silver rises in price during an economic downturn during periods of crisis. From this point of view, gold and silver can be seen as a form of savings insurance in volatile times. Platinum and palladium came into circulation only in the last 100 years and have not yet received such distribution and recognition as an instrument of accumulation like silver and gold. These metals are more used in industry and therefore the demand and price for them increases during the overall economic growth. More importantly, platinum and palladium prices are much more strongly influenced by production factors, mining, and few companies mine them, industrial consumption, demand for cars, which use these metals, and so on. That is, factors that are not directly related to the financial market, so they are more difficult to predict. Oscillation dynamics. For short-term investments, a more volatile metal may be suitable, one whose price fluctuates more. The price of silver, for example, changes more frequently and with greater amplitude than gold. This means that you can quickly earn more on it or lose more. Liquidity. Learn how quickly and with what losses you can sell the metal. Banks set a commission for the purchase of precious metals up to. If you are not investing for several decades, it is better to invest in gold or silver. They are more liquid than platinum and palladium and are easier to buy and sell at the best price. Myth. Only the rich can invest in precious metals, you need to buy whole bars. No, you don't have to be rich. You can invest in precious metals at least 100 rubles, at least 100,000. You can choose the option that suits you. Buy an ingot in a bank, so you get the metal in its purest form. Pros. Ingots come in different sizes, weighing even gram. You will receive a precious metal that will retain its value for all time. You only pay for the metal itself, not for its processing. If you have owned an ingot for 3 years or more, you do not need to deduct personal income tax on the profit from the difference in the purchase and sale prices. But if you sell the bullion earlier than 3 years after the purchase and make money on it, you will have to fill out a declaration and pay income tax. According to the new rules, the purchase of precious metal bars in banks is not subject to VAT. If purchased before March, an additional VAT had to be paid. Minuses. The Bank of publishes the book value of precious metals on a daily basis. Commercial banks take these official quotes into account, but they set their own prices for buying and selling bullion. The difference between them can be very large. A precious ingot needs to be stored somewhere. If you decide to leave it in a safe deposit box, you will also have to pay extra for this. The ingot is always accompanied by a manufacturer's certificate. This document contains the individual number of the ingot, sample, weight, and name of the plant. But if you lose this certificate, the bank will not accept the bar back. When buying gold, banks conduct an examination and evaluate the quality of the bullion. They will lower the price if they find scratches or other damage. Buy investment coins from precious metals. The value of a coin is clearly tied to the value of the metal from which it is made. Pros. You can choose a gold or silver coin of a suitable value from to several tens of thousands. Coins can be a good gift. In addition, they are compact, it is easy to find a place for them even at home. True, you will have to take care of the security of such storage. As in the case of precious metals, if you have had a coin for more than 3 years, then you do not have to pay personal income tax on the sale. Decide to sell it earlier, you will have to calculate and deduct income tax. Minuses. The bank sets the value of the coin with a markup of 2 of the net value of the metal, and commercial banks add their commission to this. Commercial banks buy coins back at a discount of up to of the price. Carefully study the conditions of different banks. Coins should be stored very carefully. Any scratches, dents, and other defects greatly reduce their price. You can also earn money with the help of commemorative coins made of precious metals, which are in demand among collectors. Over time, their value can rise faster than the value of the metal itself. Open an unallocated metal account (OMS). This is a purchase of virtual metal, you will not receive it in your hands. It's just that grams of the precious metal will be on your account. To open such an account, you need a passport tin and the money that you pay for the precious metal. Pros. An account can be opened for any amount and linked to any precious metal. You can buy and sell virtual grams of the precious metal to the bank in any amount at any time and profit from price fluctuations. As in the case of bullion, if you own virtual metal for 3 years or more, Then you will not have to pay personal income tax on income from the growth of quotations. If you close the account earlier, you will need to file a declaration and pay income tax yourself. Minuses: compulsory health insurance does not fall under the deposit insurance system. If the license is revoked from the bank, you will not receive compensation. In some banks, you can open an urgent CHI for a certain period, and then interest will be charged on the deposit. True, if you want to sell the metal and close such an account ahead of time, the interest will burn out. You will only receive the difference in the value of the metal at the time of purchase and sale. Invest in mutual funds. Mutual funds. Some mutual funds invest in precious metals. You will not become the owner of ingots, but you will receive shares of the fund. The value of these shares will be linked to a basket containing gold, silver, and other metals in certain proportions. When which metal to sell and buy, the management company of the mutual fund decides. Pros: you buy a whole portfolio of precious metals and professional investors manage it. Income tax must be paid upon redemption of a share, and then only if you held shares for less than 3 years and earned more than a year on them. In other cases, personal income tax will not have to be transferred. Minuses: you cannot directly influence the policy of the mutual fund and decide when it is worth buying or selling a particular metal. Investments in mutual funds are not subject to the deposit insurance system. If the mutual fund goes bankrupt, you are not guaranteed a refund. Myth: buying jewelry is also an investment in precious metals. No, buying earrings and rings will never make you money. Their price is times higher than the cost of pure metal in them. And in buying up or a pawn shop, they will focus on the cost of the metal. So in the best case, you will be able to return half or a third of your costs, unless, of course, this is a family decoration of the royal family which is hunted by connoisseurs of antiques. In some countries, such as India or the United Arab Emirates, buying jewelry is equivalent to investing in gold. But there they are made of metal of a very high standard and sold with a small margin about. In most cases, both the samples are lower and the margins are higher. You are unlikely to be able to profitably sell ordinary jewelry.